Welcome to the Corporate Venturing Insider series, where I interview top practitioners in the CVC world and learn with you the best practices and golden nuggets that they have accumulated over their careers. This week, you will be hearing a conversation I had with Matt, managing partner at Tectonic Ventures and professor at MIT Sloan. Matt, could you take a few minutes to share your story and how you got to where you are today?
Sure. I got in strangely. I knew nothing about venture capital. I didn't know I was headed toward venture capital. I also never thought I would be a professor and was not heading toward being a professor. So, with no plan and no intent to do either, I ended up in both. My father was a fighter pilot. My grandfather was a fighter pilot. They told me not to join a club I could not quit. A few issues after Vietnam. So, when I got to college, I bought a bar. That actually begins my whole journey because it sets up a bunch of stuff. So one is not a rich kid because obviously my dad was a fighter pilot. So I had to talk other people into buying the bar with me. My wife, I have 4 kids, so she bought the bar with me. My college roommate, who's still an investor in my fund, and a couple of people who bought the bar with me were getting their PhDs in economics. So for pretty much no good reason, I end up with a PhD in game theory. Again, I don't think I'm going to be a professor. I don't know who becomes a professor, but not me. So at that point, I opened a gym, a Gold's Gym. They were big back then, not their fault. And I'm going to own a bar, and I'm going to own a gym. I'm going to be a business person. That's my view of myself. And then Columbia University offers me a job as a finance professor. And if you're thinking, Matt, you don't know any finance, I will say I was right there with you. So I mentioned that to them. I said, I have a PhD in game theory and I run a bar and a gym. But they said, come on, you'll figure it out. So I go up to Columbia because I figure I'm not really going to turn down this job. It'll get me to New York. When I get there, that's when my world opens and I realize, wait, there's a lot more exciting businesses than bars and gyms. There's all this technology happening, other things. I get a chance to invest in something called Rackspace, which turns into a very successful thing. Axioma, which is still used today as a major risk management software, other things. And so I'm still being a professor because somebody has offered me that job. I'm finding cooler and cooler investments, and people who have invested in the bar and then invested in the gym are beginning to invest with me in all these other things. Eventually, go far enough along that many people are following what I'm investing in. I leave academia, then Harvard calls. I leave academia again to set up now a full-time venture fund, and then MIT calls. And I'm like, academia turns out is like the mob. You can never quite get out.
Very nice. And your VC firm is called Tectonic Ventures. Can you share why the name?
So when we got started, I paid even a firm. We were trying to find a name, trying to find out. I paid a firm, and they came up with some name. I can't even remember what it is. But I would have a meal I was pitching, so I'd have meals with people or whatever while I was pitching, and I would list a few names at the beginning. And at the end of the meal, I would always do the same trick. I would turn at the end and say, "Oh, which name did you like again?" And everybody would always say the same thing. Oh, Tectonic Ventures, and I don't remember the other two.
Okay, I was expecting something more smart and thoughtful about we're going to identify the tectonic shifts that are
Oh,
happening.
yeah, no, I can do that stuff all day. You want to go there? We're finding the shifts, we're mountain building, the landscape of technology. We can do them all.
So I'm impressed because you started as owner of a bar and then a gym, and then you start to invest. But I want to ask one question about the game theory. How does that discipline of game theory helps you today in investment?
Game theory is a way of thinking. So, really, I think everybody gets it because, in some sense, game theory is like applying a chess like logic to everything in life. If I do X, what do they do? Then what will they do? Then what will they do? What is everybody in this system going to do? Conditional on the state. So I found it very helpful really throughout my life.
It's a good framework, and maybe I can see how you could think about it as a one game, short game, or it could be a series of game, and then your credibility, your reputation matters over time. And the game theory address both. But when you think about venture capital, do you think we should think about the short game or the long game?
In fact, a lot of game theory is very much teaching you to think about the long game. There's a lot of repeated game technology, and the way you get to equilibrium is realizing that we're playing more than once. And so, really understanding that this is a very long game. So a lot of what we do with our entrepreneurs and how we treat our entrepreneurs and even what we invest in is conditional on this repeated game idea.
I remember my very first startup meeting just after starting TDK Ventures. I met this startup from Israel, and they're doing a sensor, and they already have a CVC investing in them beforehand, which is in the same space as TDK Ventures. I say, why would you need us if you already have them? And I remember them saying, oh, they brought no value except cash. And I remember leaving the meeting with my investment director saying, I never want to hear an entrepreneur saying this about us. And I feel lucky because it's like you get this shock moment right at the beginning, which influences everything you do afterwards. Now, let's talk about something that probably influenced you very early on, which is you made investment in startups very early on that became very successful. And sometimes people invest for a long time and they don't get success. And you did get success like Rackspace and others. How did that influence you? And did that create a positive bias when maybe there was a context at the time?
I do think it influences you. I think one of the most difficult things about new investors, and I talk to a lot of students and help a lot of people begin their journey in investing, is that we all do essentially the same thing. You sample, you're like, ooh, let me look at this startup, let me look at that startup, let me look at that one. And then after a certain amount of sampling, you like one. That's like, it's better than the others. And this is the natural outcome of the optimal staffing problem. And you say, ooh, let me do that one. And if you have never seen a truly great team with a truly great idea, then you just don't know. So you sort of look through the sample of things that you see and you pick the best one. And there are some things out there that are like really remarkable. And then you have to have this extreme patience to wait and really hunt down these great ones. And it's hard if you've never seen it. And I got lucky early on and saw some great entrepreneurs build some really amazing companies.
That makes a lot of sense. Now, what keeps you curious after decades of research and investment?
Oh, I mean, I just am curious. Like, in some sense, everything I already know is boring. All I want is to learn. So, the greatest thing about my job is that geniuses, like true geniuses who are experts in the world on certain topics, they will come and they will spend hours with me and try and help me understand it. And I can ask any question I want. In some sense, I don't know what keeps me curious, but that's some sense the greatest part.
I think you've just described why, if you're really curious about nearly everything, this is one of the best jobs in the world. You keep learning every day across world class experts.
Yes. Yes.
All right, let me challenge you a little bit. What's a contrarian belief you have? So, one you believe with conviction that very few people have, whether it's about innovation or venture capital.
Sure. That you want to see more deals. This is like the most persistent thing in the idea. In fact, everybody even brags about it. We look at 10,000 companies a year to say yes to two of them. I think that is almost total nonsense. If you are looking at 10,000 companies a year, it means that they are blurring by at a zillion miles an hour. I don't know how you tell the forest from the trees. It's a little like saying, I'm hunting for a needle in a haystack, and what I'd really like is more haystacks. What? No. What I'd really like is less hay and more needles. Okay.
I love it. That's a real golden nugget. I remember early on at TDK Ventures, we did say when we reached 1,000 startups we looked at, 2,000 startups we looked at, we stopped saying it externally. We still say it internally, and I don't know if it's vanity or not, but the reason is we want to show that we are at 0.5% quite constantly of what we've seen versus what we invest. And I think it's a message more to the mothership to say we are very disciplined. At the same time, I think there is an element of serendipity. I'm sure Rackspace was somehow random at first. Then, of course, as you play this long game that repeats and you get credibility, less so. How would you guide, let's say you're a first time VC or CVC, how would you guide people in terms of thinking of sourcing?
Yeah. What is you? What should you be looking at? What is right for you? So, for example, when I first got going, how did I get Rackspace? Well, my best friend's sister married one of the co founders of Rackspace. And I did that deal. And Axioma was the same. He was a professor at Columbia. He was a genius. He was strongly ethical. I mean, I knew a lot about him. And it wasn't that I was out randomly, like, what a lot of people are doing is like, oh, let me look at everything that's gone up and down Silicon Valley 200 times, and then I'll just choose the good ones. What? No, you won't. They were all selected already, unless you assume everybody in Silicon Valley is an idiot. So, what is that deal flow source that's right for you? Let's say you're like a super marketing guru and you've been going to all the marketing conferences for years. Probably should get your deal flow in and around marketing and whatever else.
So I want to talk about why do you think investors with decades of practice will have an advantage versus people who don't? And I'm asking you because you, without the investing practice, got really successful early on. So you could argue there is an element of success that doesn't need decades.
Yeah, it does not need decades. And in fact, there's things that because I have decades, I should be doing and things I shouldn't be doing. Almost exactly like what we talked about. You know what I probably shouldn't be investing in? A new dating app. Not my expertise. I don't know anything about it. I don't know what the kids do today. I don't know how to talk to each other. Right? Like, I'm out. What am I more likely to be investing in? A deeply technical founder creating a solution for a business problem. I can get deep inside of a corporation, talk to lots of different people, really understand the problem, the economics behind the problem, and find value there.
I think it's back to what you said earlier. What is you? And it has to resonate with who you are, what you can bring to the entrepreneur.
I would really, I tell this too, because I deal with students, is in some sense, really, instead of saying to yourself, hey, I want to be a VC because that sounds really cool, because it does sound really cool at a cocktail party. But every day you've got to put your money, your reputation on the line, your human capital into a deal. What do you want to be investing in? Whatever it is.
Yeah, no, that makes sense. Now, of course, I talk about you also doing a academic track, but from what I've seen in your videos, it's very applied type of teaching where people come and they try things, they come back the week after and they have to do some progress and present. Can you speak to the value of applied teaching versus just theories?
So I am a game theorist, which is really like a branch of mathematics more than anything else. And my early papers are in auction theory, and they are mathematical models that are pure theoretical representations of the world. My latest paper is a theoretical representation of decision making inside a venture capital firm. The question is, how should you make a decision?
So I wrote about this, which is I think corporations like consensus
Yeah.
because they have a distribution law type of outcomes.
When we were talking about the things that corporate VCs do wrong, this is literally one of the problems that we talk about at the end of the paper. Corporations are consensus entities. They run by getting the finance team on board, the IT team on board. But the answer is no. In early stage startups, there is nothing that all those people are going to like. It's all horrible at first.
And when you invest in early stage like you do, the level of uncertainty is very high. Most of them will probably go to zero, but some would go very, very high. This kind of power law type of outcome. And I think that's what probably drives this idea of the fewer people voting yes should be driving the decision.
It also, it's true, but it also even shifts you. Like, let's imagine that we were together with 9 other people on a giant committee that we were all going to vote on. What would it take for you to say yes? Your vote is only going to matter if everybody else has said yes and you say no. If other people have already said no, your vote is completely irrelevant. We have unanimity is required. So your vote matters in exactly one moment. 9 people have said yes, and it's up to you. Now let's imagine on that same committee, it's one person can do the deal. When are you going to say yes? Well, there's only one moment that your vote matters. Everyone else has said no. So now everyone else has said no, and you're going to say, no, guys, you're all wrong. You're going to catch this weird little magnificence that one person believes in, but super strongly. Because wow, would you have to be a strong believer if you're voting yes while 9 other people vote no? And so you're just going to catch a completely different type of deal if you're looking between unanimity yes and a one person says yes. It's just a completely different yes.
So last week I heard it's a top tier VC in the space we work with. There are 5 people in the investment committee. They score 1 to 5, but you just need one person giving 5 and it goes ahead.
Yes.
And that I thought was so powerful.
We interviewed all of the top, like 100 top firms, and we ask both formally and informally because it's important.
So at TDK Ventures, as long as the investment director is convinced and they've gone through the steps, including diverse advocate session, by design, I don't have a veto right. We go to that investment committee with 3 corporate officers, 2 votes enough. But the value of that is it gives a signal to everyone inside TDK that this is blessed to be TDK long-term strategy, which means we can unlock that superpower that we need to build value for the entrepreneurs.
Right. This is what I mean by like, it's not so easy. You can't just have one person do the deal, but that would create a whole nother set of problems with it. Like on my team of only 3 of us and we all get paid on the carry, like one person can do the deal, but we're pretty sure we're aligned. Like, so you need them bought in.
I've seen you talking about market the private equity is willing to pay will ripple down. Sometimes I look at the valuations like not North America, but Europe or even India, and they feel like so much cheaper. But actually, price adjusted with the outcomes, it's priced in. So can you speak to maybe the misconception of lower valuation in other geographies or different verticals?
In some place, in some sense of the word, it's everywhere. Every time you're looking at any price, the question is like, isn't it just priced in? So if there are prices that are lower in India, well, isn't it like the whole world doesn't know cheap, amazing deals in India and everywhere else bad? It's possible, but that's what you'd have to believe that like you're the only one to figure out that's the thing. I think the funniest place you see it is everybody who invests at whatever stage they invest at, they think everyone after them is like shooting fish in a barrel, and everyone before them is like lost their mind and is randomly picking. Right? It's hard where they are. After it's easy. Before it's like stupid. No one could do it. And this is a famous idea. But the thing that people miss in that statement is it's all in the price.
Yes.
And that's true everywhere. So if you're doing this round, yes, you have more information than doing the round before, but it is a part of the price unless you have some good reason to think it isn't, that you have some window or reason to believe that it's not in the price. And that's the most important part. It's not just like it's cheaper. It's no, I have an insight here. It is too cheap, right? Or it's cheaper, but it's too expensive. We actually shouldn't be doing it. It's cheaper, but not cheap enough.
Maybe it's a good time to talk about luck because I find what's difficult about VC is that sometimes people do get lucky. They
Not
get to
me,
meet,
but yes, I know other people. Yeah.
they do end up meeting the right person where you wouldn't expect them. Canva could be a good example. Out of Australia in Perth, that's not where you would expect that amazing company to come out of.
Yes.
Because of these stories of amazing success where you don't expect them, it becomes like, oh, this is what you could expect, versus it just happens to be on the right side of the power law. But this is very few of these examples, and most of them are more in the you need to be in the Bay Area, you need to be in Bangalore, you need to be in London to get to this high concentration of needle, to go back to your analogy.
Yeah. So, okay. So, first of all, there's an enormous amount of luck. And I often say, I will know if I'm good at this when I'm dead. By then, I'll have done enough deals that maybe we could get to statistical significance. Even then, it's not clear that we could. So, it could all be luck. It could all be luck. And you could all be a conditional statement of luck where you got lucky at one point, your first deal, and then the deal flow started happening because good entrepreneurs will take you because you had good luck before. And then it's just like literally almost single shot luck. You did one great deal and or something else. You happen to be the person in semiconductors right before semiconductors blow up. So like all of your deals look like genius deals or something like that. Enormous amounts of luck. That actually drives a lot of incredible stupidity in the industry, where people then say, because most people feel like when from the outside is like, oh, they're obvious when they're good, and they're not. So actually, one of the things I do in my class is I get early stage VCs to come in and I have their latest entrepreneur pitch over video. The VCs in the class, the entrepreneur pitches over video. Then we turn off the entrepreneur and everybody turns to the VC, and they're all like, "You invested in that? that's horrible." Like the students are like literally shocked that anybody would give that money. And it's like, oh, that's only because in hindsight they all look obvious. Airbnb, come on, that had to look really stupid, right? Like you're surfing couches, or there's no way like that would be obvious when you looked at it. It would not be obvious. Even Google, a new search engine, like whatever. There's lots of them, wildly successful ones. Why do you need a new one? They're not obvious, and it's all luck. So therefore, let me just do every random thing that comes my way. And so we get all this money pouring into like crazy bad ideas. And a lot of venture capital money is wasted down all that path. But you definitely can improve your chances at getting lucky.
I think it's true more when it's a distribution type of outcome, where if you work harder, you're more likely to get a better outcome. But when it's a power law, you may work 30% harder and not see anything. So this is where I think VT is quite different from most of the other places.
I think it's super painful because you're graded so clearly on so few shots on goal. Like if you're the best doctor, you're the best geriatrician. Like would anybody even know? I mean, like you're here, we like do these tiny number of deals, a few a year, and then we have to keep that track record with us for life. And like,
I remember meeting someone who's been on the Midas list for quite a few times. I say, wow, that's amazing. He said, no, if I didn't make that one investment, I would never have made it. And it's really humbling in a way.
yes, it's really painful in a way, is what it is, because like in some sense, all I want to do is learn, and the number one thing I want to learn is what makes a great investment. And so we're constantly trying to ask ourselves what went right and what went wrong. Even because, like, even when we make money, we often go back and say that wasn't because of us. That was luck.
So I smell a best practice here. You said when we go back. So I feel like you have that discipline of looking at the outcomes, going back to why you decided to invest. Can you speak to that best practice? Because I think that's fundamental to even learning.
So we do it all the time. Not even when we get an exit. We do it like all along the way. Is this what we said it was going to do? Is this where we are? We're trying to just evaluate our decision making along the way because it is very easy to, in hindsight, once it's all exited, tell yourself that you nailed it. And we do this all the time. We say things like, oh, I was always worried about that co-founder. Yeah. And then we go look at the memo. Nope. We all said that co-founder was great.
But it also means you are very disciplined to document your decisions, right?
You got to be writing it down. You will never remember why you did a deal. You will make stuff up. This is the human condition about memory. The weirdest thing about our memory is that we have this belief that our memory is accurate. So at like almost a core sense, like if I asked you to describe your drive to work today, whatever, if you drove to work, you would be like, yeah, I remember my drive to work. The answer is no, you do not. And if I told you, you could like recall parts of it, but your brain would fill in all sorts of nonsense that was like, yeah, we drove along, it was raining, whatever. You do not. They've done tests on this. They have people walk around town and then they show them videos of the walk that they just took. And they go, yeah, I remember that. And they go, that's not the walk you just took.
That's not.
That's not. That's somebody else's walk. And they're like, they literally, the odds of them getting it right and wrong is 50-50. They have as much shot of getting it right as wrong because they show a video of like approximately the same walk, but it's not theirs.
Wow. It's not about bad intent or good intent. It's just you don't remember. And if you haven't written it down, committed to writing,
Yes. And it's even worse than you don't remember. It's that you do remember incorrectly and you're convinced that you remember correctly.
that is actually really good advice. Yes. Now, let's talk about luck and lack of recently. I think 2025 is very hard on VCs. But what do you think of 2025, second half, 2026?
Uncertainty, we know. All economists, all of economics is like basically uncertainty is the worst. All we want is steadiness, steady inflation, 2%. We want all these nice, steady, known. That's what does it. So, for whatever, whether you're pro Trump or against or whatever, the thing that's driving me crazy is if we could just do them in a way that didn't create massive uncertainty, but instead laid out what was going to happen, then implemented, then went through, it would be so much better for all of business. And so it's just the uncertainty is killing all of us. Everybody just stops in the face of uncertainty. We can't. I don't know which way to plan. Should I move my manufacturing onshore? Should I move it to Vietnam? Should I move it out of Vietnam? Should I? But I don't know. So I don't want to make some giant move only to find out, well, that was incredibly dumb because everything changed again. So instead, we do nothing. When we do nothing, we shrink or contract, et cetera, et cetera, et cetera. So as long as this uncertainty continues, stating the incredibly obvious, it will not be good for us.
So, which actually, I think you're leading me to my final question, which is, what are you the most hopeful for the next 2 years?
2 years. 2 years is like too short run for me. The way the world will change when we all have AI co-pilots and agents that are helping us in every aspect of our lives, we're not all going to lose our jobs. Okay. We're not. Everybody, the efficiency is going to become remarkable. It's always a little scary how the world will be different than what we're used to, but I think for the most part, it'll be a really neat world, and not one where we're all unemployed. 200 years ago, 79% of the world was employed in farming, food production. And then 100 years ago, it was still 26%, and it's 2% today. It's like if you had told anybody that 100 years ago or 200 years ago, they would have said, well, we're just going to have these massive unemployment lines where we hand out food for all the people who are not employed in food production. And of course, today that's like a laughable answer. Like, what are you talking about? We literally have almost no unemployment. Like, we have dramatically low unemployment, and 2% of people do food. We do a whole bunch of stuff that you couldn't have even described to somebody 100 years ago, let alone 200 years ago. And what will we do in the future? I don't know. A bunch of stuff that's really hard to even describe to someone today.
Okay, so there's a lot to be hopeful. Matt, thank you so much for your time today. You gave a lot of golden nuggets. Those three words I will remember is what is you? That was so good.
Thanks for having me. It's fun to be here.